Housing demand is falling, but prices continue to increase here in the Phoenix area. What is that about? How's that possible? Hey, this is Kelly Cook. Welcome to Everything Phoenix. We are live here on our show that we do every Thursday, once a week. So definitely tap in if you haven't heard about it. Hopefully, you will continue to watch because we try to be quick hitting. I'm from Nebraska originally, so meat and potatoes, no fluff, get right to the point, give you actionable data and information that will help you make better decisions when it comes to everything and just be informed when it comes to everything Phoenix. So we're going to jump right in like we always do, but we always cover topics, the housing market, what's going on. Right now, demand is falling, prices are still increasing. What's going on with that? We're going to tell you why and what's going on there, as well as development stuff. And there's a lot of development around Phoenix, and Phoenix was just actually rated as the second highest or best real estate market going into 2024. So if you're looking to place dollars for investment, or maybe just for your personal residence, and looking to hopefully have an appreciation play on your personal house when you think you may want to sell it, Phoenix and the surrounding area is a great place to think about and call home potentially. So this is all positive news. Now we're going to dive into that too as well. And then the D-backs, the World Series, guys, the World Series just ended last night. Unfortunately, the D-backs Cinderella run came to an end, which is unfortunate because they had such a good run. They're such a good team playing small ball and making things happen. Unfortunately, they ran into a buzzsaw with Texas, the Texas Rangers, and Texas actually got their first World Series championship since their club began. I think it was 67 years ago. First time they won it. So at least the D-backs won in 2001. That's good, but we were so close, had a chance, and of course lost in Game 5 last night to the Rangers. So that stinks. We're going to cover the economic impact of that to the Phoenix area. It was actually really good. So let's jump right in. Let's not dive. Let's jump. Let's jump in, okay? We're going to cover here some housing data, guys. Check it out. The monthly average sales price per square foot. Here's a graph, and you don't have to be that intelligent to figure out what's going on right now in a macro view of the Phoenix housing market. It's going up. So how is that possible? How's that possible if you just said demand's going down? Good question, especially if I'm telling you supply is going up. So supply is going up, demand's going down, but yet prices are still increasing. Shouldn't it be the other way? Well, it most likely will be fairly soon. But this is a great example as to why prices are a lagging indicator. So, for example, we have several clients right now who, they price their house proudly. Hey, we're always trying to get as much money for our clients as possible. But at some point, the market will prevail. The market will tell us what's going on, and we always feel our job here as real estate agents is to give that information back to our clients and interpret that for them. But they still get the final say at the end whether or not they want to move on price or whatnot based upon how the market's moving. Well, in this situation, this is a good example as to why price is a lagging indicator. And if somebody's not getting their house sold potentially, and the indicators are there that potentially there should be an improvement on that price, then if they do so, they probably will get in front of this market, this pricing, and get the house sold. But a lot of times the argument is, hey, Kelly, the price is going up, right? The price is going up. So why am I going to reduce the price? Look at this, right? I don't see prices falling. True, but demand's falling, supply is increasing, price is a lagging indicator. That's just a matter of time. And here's what we know. If I now share my screen back with you guys and go to this graph, you can see that. Look at that. I mean, again, just the visual aspect is pretty clear. Active listings are increasing at a rate faster, or the second fastest increase of any rate since 2005. Let me say it again. 2005 did not end up well. Now, do any of us think that's going to be like 2005? No, emphatically, no. This is not the sky's falling chicken little here, but the reality is that the supply is increasing actually fairly quickly now over the past week or two. And you saw what it did with the green graph here in 2005. And then here's the little line that is 2023 right now and where supply is going. So what's the commentary on this? Okay, here we go. October 28, just a couple of days ago, active listing counts are rising at the second fastest rate we've ever witnessed for late October. Since the low point of 11,473 in terms of active properties in late July, they have climbed almost 35% and are rapidly approaching 16,000 homes on the market. The only year which saw a faster rate than this at this point in time of the year 2005. 2005 saw an increase of almost 80% during the same period, so we are not in that territory. 80 to 35 is not the same. But the increases available supply is making life more difficult for sellers since they now have to compete far more aggressively for the relatively few buyers that are out there. As you might expect, price cuts have risen sharply since July, and we are recording well over 2,000 cuts per week. Price cuts on listings, they're not recorded. Because they're not recorded, prices don't reflect it yet. Okay, that's why the graph is still going up. As recently as September, we are seeing fewer than 1,500. All right, now let's go look at this one here, what they say about the commentary on this. Although the market is weakening quickly, you couldn't tell from the closed listing prices that we're recording. Like I said, it's going up. Breaking through the $293 level for the first time since July 12th of 22, the chart gives us the impression of a market in robust health, very good health. Not the case. This underlines the fact that sales pricing, even when measured every day, is very much a trailing indicator. I use the word lagging indicator. Very true. Many of these prices were established in contracts agreed a few months ago when the Crawford Market Index was still over 160, representing a strong seller's market, which with declining inventory. Sales volumes have also held up better in the luxury market than at the opposite end of the spectrum, where first-time homebuyers have difficulty affording a mortgage because of high interest rates, right? This bias towards the higher end pushes the average price per square foot up. Okay, so if you take out all the properties that sold for, say 1.5 million and more, then you don't have this graph. The graph looks greatly different. So the luxury home market is kind of propping up the housing market overall right now. And again, this is a lagging indicator in which it's going to come back down, guys. So if you are a person thinking of selling, if you are a current home seller, we'd love to chat with you further about this, but if you already are in the mode and you're doing it, you might want to consider this data to be in front of the market. Guys, the smartest thing, okay, I tell our seller clients all the time, the smartest thing that any seller could do, including myself if I'm selling a property, is stay ahead, out in front of the market. Very important to do. So you use data and not emotion when trying to determine what that looks like to stay ahead of the market. And if you do, you will get a good offer, even in a market where the buyers are fewer and far between. Okay, so I would highly recommend to consider that. Now, if you go down one more step here, you can see that right now, obviously, I'm going to show my screen here, that right now the cities across the Phoenix Metro are all in declining modes. Now, if I take the same report and I go to, let's see here, where can I find the overall, oops, sorry guys. Let me go over here. Here's active listings, right? Another active listings report for the city of Phoenix specifically. And you can see what is going on. That right now in 2023 is starting to increase. And that's just Phoenix. I could go to multiple different cities throughout the Phoenix area and pull that same graph. If you're curious, I'd be happy to send you those graphs to you. But the CMI is now well below 160 for the entire area of Maricopa County. And it is heading towards a balanced market, which we think will be there in about 1 week. That's right, guys. 1 week will probably be at the seller's market. So interesting aspect from that. So hopefully that doesn't happen, too soon. But again, we're looking about 1 week. We're probably going to be there, right? Balanced market. So stay ahead of the market is the moral of the story. All right, let's look at interest rates. Interest rates, guys. What have they been doing? Okay, well, you see, here's the graph right here. You can see that they're down to 7.51 now. Last 2 weeks we've been talking on our live channel here. The 30-year fix has been around 8, if not a little bit above 8. We're talking 7.51 now. This is good. It's a half point in just a week, guys. That rates have improved. Why? Primarily because of this. These articles right here. Let's share this real quick to you. Mortgage rates surge lower after Fed announcement, but not necessarily because of it. Okay. What does that mean? Well, we had a Fed day. The Fed met and they determined that they are not going to raise rates. This is one of the 8 scheduled announcements by the Fed regarding monetary policy. At the simplest level, this just means they'll announce a change or no change in the Fed funds rate. The market didn't expect a change today, i.e. yesterday, and did not get one. So that's good news. Now, I think what happens is that makes it settle into the normal flow. What's the normal flow? Well, let's go over here to this screen and you see the bond market. The bond market is rallying. Why? Because you have the Middle East war going on right now. You have a lot of uncertainty in the world, global economy, in the markets. And so when that happens, people run to the bond market because it's more secure, more safe, and they pull their money out of the stock market, causing the stock market typically to go down to a degree. When that happens, interest rates on mortgages typically fall in line with that and run inversely of the bond market. So they should come down, but they weren't coming down because the war just didn't start in a day or two ago. It started like since October 7th, right? So it's been going on for almost 4 weeks. And so it hasn't conformed the rates, meaning to what the bond market and stock market have been doing because of that until now. I guess it needed this Fed to speak to build that in. And guys, you saw rates come down. So if you're thinking about buying a house, guys, I spoke to my lender this morning about this, and what I would do is I would highly recommend that if you're looking to buy a house, to consider locking right now. It would be a good idea because chances are it could go down lower. I guess it's always possible, but there's a jobs report coming out tomorrow, and the jobs report potentially could have news. They're starting to, they always pre-build this into the marketplace, right? All the investors and the people trading stocks on Wall Street, et cetera, right? Day trading, whatever. So they're starting to build this into it, and they're starting to. The information is coming out as of this afternoon that most likely jobs report are going to issue news that's going to potentially have rates jump back up a little bit. So I would consider that if you're thinking about maybe buying a property and you have the ability to lock something here soon. Just a little food for thought, okay, on what the economy is doing. But rates are down, which is good since over the past couple of weeks. All right, that's the housing market right now in a nutshell. I think you guys get the point, but demand is getting softer because I think rates, etc., and supply is getting actually worse. Now, on the luxury home market, this is actually pretty good. We're seeing specifically that our luxury homes that we're marketing are actually doing fairly well. They're selling. They're not selling at a higher clip or really a lower clip like most homes, but they are selling. And so I think that that is propping up the market like we just talked about. And if you have something in luxury space, you need to speak to somebody who knows that very well, because that is going to act and react differently than the rest of the housing market across the Maricopa County area. Okay. All right. Sharing my screen again. Let's jump back over to development. Here we go, guys. Phoenix, the second hottest market for real estate in 2024. This is good news because we're not there yet. We're in 2023, and they're already saying, here's the report coming out by the Urban Land Institute. This report right here, which is Emerging Trends in Real Estate. This thing is 142 pages long, and it has more graphs than you could even shake a stick at here about a little bit of everything, trying to predict where the money might flow for real estate in 2024 and the best opportunity. So if you go back to this article, that's what we're talking about. So pretty interesting stuff. Now, Phoenix was ranked second top market to watch for overall real estate prospects in 2024, behind Nashville. Okay, there's some food. There's some food for thought there. Okay, and just above Dallas Fort Worth in the emerging trends in the real estate report for 2024. Okay, the investments in Phoenix by companies such as Intel, LG Energy Solution, Taiwan Semiconductor Manufacturing Company, and others sends a message to the world that there's opportunity here. No doubt. We still got people moving here, and those people need a place to stay and live and shop. So that continues to drive growth. Regardless of what the economy and stock market are doing, those companies keep coming. And that's true. The industrial sector has slowed down from the breakneck speed it was at during the COVID-19 pandemic, but it is still seeing healthy activity in the Valley. And Phoenix retail market is also seeing the lowest vacancies on record, even as major power centers are being developed for the first time. Interesting, right? Retail is up in Phoenix. Lowest vacancies they've seen in a long, long time. So Phoenix was grouped with Atlanta, DFW, Houston, Miami, San Antonio, and Tampa as super Sunbelt and magnet market categories by Urban Land Institute. Super Sunbelt markets are considered large and diverse, but also still affordable with emerging powerhouse economies. Phoenix made the list, and we're number 2. Let's go. All right. So that's all good stuff. Households consider a range of factors when deciding to live, or where to live, and climate risk do not rank high for many people, the report said. Consider that Phoenix jumped 7 places this year to the second overall position, and Las Vegas, which is also a warm weather climate, cracked the top 20 for the first time in at least a decade. All right, so the newest ranking is a return for Phoenix to the top 3 markets to watch after it fell to the ninth hottest in 2023. The number 3 ranking the previous year was the first time in more than a decade Phoenix ranked in the top 10 for real estate prospects. And in other news, Tucson, the little sister to Phoenix, I guess, right, was also listed in the report as the 76th hottest real estate market to watch in 2024, guys. So there's some good news. It's not just in residential reports that you're seeing these good reports come out or prospects for 2024 trying to predict where you should maybe move to or maybe invest your money in. It's also a commercial report. Urban Land Institute is a commercial real estate report, and it's 142 pages in which they have graphs and data to back up everything. And if you take your emotion out of it and don't worry about these other things that the media wants you to worry about, which is, will they have enough water? I don't know. It's getting global warming, so it's going to get really hot there. So next year, it might be a high of 144 degrees there in July. Like, if you just ignore all that because that's nonsense, then fix your eyes on the facts of the matter. Then here you go, right? There's the place to be, unless you want to be in Nashville. That's pretty cool too, or in DFW, top 3 real estate markets in 2024. All right. Now, if you go back to the screen here for some more development, we'll hit this really quick, guys. We won't go through this whole thing, that's for sure. But Toll Brothers sells a newly built 323 unit complex for $102 million. The multifamily complex development sector is still on fire in Phoenix. It still is. We're in such a lack of supply that it's on fire. And then you have this industrial space here that just got done, and now they are starting to lease that out. It's 1.2 million square feet, guys. Industrial in Buckeye in the West Valley, and East Mesa, Queen Creek in the East Valley are on fire. There's so many big, large distribution industrial buildings that just got built in the past year or two. It's not even funny. And they are leasing out. It's crazy how that's working. Then you got some other deals in Cooley Station. And speaking of retail, check this out, guys. Tanger Outlets in Phoenix. Major commitments on some of these retailers, right? From Psycho Bunny, which is a menswear brand, to Viore and Ulakai. They sell island-inspired footwear. I've never heard of them, and then you have Windsor and a bunch of and a big, huge Levi's, Levi jeans store that rented out almost 6,000 square feet. So retail is on fire. The real estate market is on fire. People are moving here. It is a good time to be in Phoenix, especially because it's starting to get cool now, right? And it's going to be nice for the next 6 months or so, 7 months, which is really cool. Now, this article is I think it's really cool. Did you know that they said about 3 years ago or so, the governor at the time, Doug Ducey, created some huge tax incentive to try to incentivize anybody who's going to build a film or TV production studio in the Phoenix, Arizona area, right? Or maybe in Arizona in general, but I think primarily the Phoenix area. And so this article talks about this, guys. Maybe we're the next Hollywood. Maybe we're going to be like West Hollywood or East Hollywood, I should say, right? Maybe Southeast Hollywood from where LA is, right? But this is pretty cool, guys. There is a proposal over 320 acres in Phoenix, okay, for a entertainment complex with a mix of commercial uses, all right? At full built-out, Desert Studios could encompass 48 sound stages totaling 40,000 square feet each, okay, with theaters, warehouses, medical devices, motor pools, etc., restaurants, reports, and a film-themed entertainment complex with shopping, dining, and more can be developed on the site, according to documents submitted. This is crazy, guys. The project is being envisioned for a sprawling site just north of Interstate 10 and south of Indian School Road between 355th Street and 339th Avenues in the Buckeye area, about 40 minutes west of downtown Phoenix, okay? This is awesome. It's going to be located at the southern portion of the master plan Belmont community. Belmont. Heard of this one? Okay. This is an update on Bill Gates' new smart city in Arizona. There's the Phoenix. That's not Belmont. Okay, that's downtown Phoenix. That's pretty cool night shot. But he invested over $80 million in 24,000 acres of land to build a smart city, and it's going to be supposedly called Belmont. Well, nothing's happened yet, but now part of this land out here is near to that area, and it's going to be a TV and production massive studio complex, okay? So they're trying to attract, obviously, movie sets and production of movies and TV shows to come to Phoenix. That's cool. And then obviously it's going to be out in the middle, of right now, which is nowhere in West Buckeye. But you're going to have there's so much land that's spoken for by major developers out there that it's just a matter of time. Could be a decade, could be two, but it's just a matter of time before that place will be buzzing with activity. Lori, what's going on? We have Tanger outlets in Pennsylvania. Love more shopping. Yes, I know you do. I know that you do love shopping. So, yeah, I like shopping too if I get in the mode and have a couple hours free, But yeah, Tanger outlets are awesome because the deals are typically a little better at the outlet stores, right? So I'm never opposed to that. All right, looking back on this article, there are other people who are also proposing potentially studios for TV and entertainment, filming, producing, etc. There's another one for a 130-acre film and TV studio campus called Diamond Sky Studio Complex along 303 and Lone Mountain Road in the Northwest Valley by Peoria. Okay, but here it is. Governor Ducey, passed a bill with $125 million in tax incentives for TV and movie productions to compete in the film industry with other states like California. So this is cool. And now they're starting to flock here because who doesn't like a good tax credit, right? Or tax break of some sort. So that's really cool, guys. So look for potentially people that are coming up right now in high school. I mean, your kids that might be in junior high right now or middle school or high school, maybe going into college, that degree they're looking to get into, which has to do with entertainment and film studies. There could be a much bigger opportunity for them in the Phoenix area, in Arizona just in general, to stay home, stay local, and still have a thriving career potentially doing that thing without having to go to California or New York or whatever it may be. So pretty cool, pretty cool. Next article here. Realtors, okay, brokerages. That's interesting. We'll skip down for right now because that's really complex. GCU is facing a fine for $37 million from the Department of Education, which is crazy. I think all local people here are like, "What is this all about?" So there's both sides of that argument. They're saying they deceived people for saying that their doctorate degrees were cheaper than what they really were. I don't know, but that's interesting because Grand Canyon University is a big university for the Phoenix area, so that's why I just pulled that out for a couple seconds. Then you have a 25-acre ranch over a former Arizona gold mine. That's right. Did you guys know that part of Phoenix was and had a gold mine back in the 1800s? And there's still Goldfield Ranch out there in Apache Junction in the East Valley. You can go tour today, and they have a Western Road, saloons, restaurants. It's really cool. So if you have a chance to, we did a video on this, matter of fact, check our YouTube channel out, Everything Phoenix, and look and search Goldfield Ranch. There's a cool video that we did. So if you are in Phoenix visiting as something to do, or you just live here and you haven't done it, you need to go visit Goldfield Ranch. It is awesome. But this guy bought 25 acres out in that area, and there are a couple gold mine shafts still on that property today. He's going to cover up, but he's going to build new properties out there and try to incorporate the creek and some of the natural geography, etc., with the development. So that's good if it's going to be developed, I guess, right? All right, here we go. City of Phoenix World Series to have $10 million per game impact, guys, and we hosted 3 of them, game 3, 4, and 5, and lost it last night. But that's really good for the City of Phoenix. $10 million injected into the local economy per game for a total of, even I can do that math, $30 million. That's awesome. Okay, we're glad to have Phoenix once again on the world stage. Said the Phoenix mayor, and that is really cool. In downtown Phoenix, more than 12,000 high-density residential units have been added, and the population has more than tripled, and the number of restaurants, bars has jumped from less than 100 to 230, according to the City of Phoenix. And guys, it's really cool because having that redevelopment of Phoenix downtown area is awesome. Guys, here's the deal. Phoenix is really spread out. And so it's kind of a bummer because there's a lot of cities across the country that are great American cities that have kind of central nucleus in their downtown. I don't know, cities like Denver is like that. And there's many other ones, right? Most of them are like that, I would argue. Well, when it comes to Phoenix, it's spread out, and you have, downtown, the Diamondbacks, and you have the Phoenix Suns, but then you have the hockey team elsewhere. They used to be in Glendale. They're now playing at ASU Stadium till Fred's a temporary stadium. And then you have the Phoenix Cardinals, which are out in Glendale too. Then you have Old Town Scottsdale, which is the hub of entertainment and world-class dining shopping. And so you have these competing central nucleuses around the city that is kind of cool in a way, but it's also, it'd be kind of cool if it was all kind of condensed into 1 or 2 areas as opposed to 3. So just my 2 cents on that, but that gives you an oversight generally of how Phoenix is structured. So pretty cool though, going back to the D-backs, that they were able to get that World Series ticket and inject a lot of money and hope into the city of Phoenix, especially when it comes to baseball. All right, finishing up here. This is just about more D-back stuff. They had improbable odds to win the World Series, and they kept breaking the bank when it came to the houses, right, of these bookies and bookmakers, odds makers, I should say, when it came to gambling. So they just kept defying it, which is awesome. Okay. And then last but not least, well, two more things real quick. Surfs Up, Cannon Beach, inches closer to splashing around in Mesa, guys. This is awesome. We're going to have the ability to surf in the desert, right? With Cannon Beach. We have another one coming up too that's being developed in East Valley, but Cannon Beach is the first one that's going to be finished at this time. But Cole Cannon made sure he tried the food in every restaurant, went through the workout at any gym, and got a facial at whichever health and wellness concept that was interested in coming to Cannon Beach Surf Park. I do it all because I wanted to make sure our customers are put first and have a great experience when coming to a surf park. I can't wait to go. I'm not even a surfer, but I'm going to go to this. Take my kids. This is going to be awesome when it's done. The developer behind the 37-acre mixed-use development and surf park invited local media for the first look at a wave pool that he hopes will be in use by the summer of 2024 in Southeast Mesa. Cannon Beach, located at the southeast corner of Power and Warner Roads, would include 500,000 square feet of retail restaurants, a surf lagoon, a 17-foot cliff diving lagoon, and more. This is awesome. Hotels, etc. So I can't wait for this, guys. But again, one more thing that's making Phoenix just more amazing, right? It's going to have a little bit of literally everything. I mean, who would have ever thought you could surf in the desert? Well, thanks to Cole Cannon, now you'll be able to, and I can't wait to try it. Plus, you know what? The best thing about this surf park is there are no sharks, so I'm totally cool to fall off and no problem. Not even worried about getting bit by a great white. I'm not up for that. That's not in my vocabulary of what I think is fun. Okay, but here I'm in. All right, last but not least, guys, this is interesting. Hey, here, who are the highest paid athletes in the Valley, in the greater Phoenix area? Who are they? Well, they have a little article on this. I just thought it was intriguing, right? Because some of these athletes make a lot of money. Now, most of them were Phoenix Suns players. Only infielder Ketel Marte cracks the top 10 for big money deals when it comes to the Diamondbacks. So Ketel Marte is their highest paid player. But the Phoenix Suns have three super high paid players. You're looking at Bradley Beal at $46 million, Kevin Durant at $46 million, and Devin Booker is only making $36 million this year. But he signed a supermax contract last year, and he'll be enjoying $222 million at a 4-year deal. I mean, I don't know what that is. What's the math on that? About $60 million a year. Wow, right? Are you kidding me? So good for you, Devin Booker, man. All you kids out there right now, I'd be working harder on your basketball, football, hockey, baseball game, right? And try to get in the professional ranks if you could. And they said Arizona quarterback Kyler Murray is not on the list because he hasn't been on the active roster yet, but he will pay $39 million this season when he joins the 53-man roster, which, by the way, he hasn't played at all yet this year, and the dude is going to make $39 million. I mean, what's going on here, right? What is in the world is going on? Acre Point Media, thanks for commenting. Looking to move from Seattle. I checked out this Santan Preserve 2 weeks ago. Do you think these new construction developments will have big incentives in a few months? Good question. I'm glad you asked. Now, here's what I do think. I don't think right now, it doesn't appear, Acre Point Media, right, had a great question. I'll leave it up. It doesn't appear that new home construction in terms of prices are going to be coming down anytime soon. Why? Because that's the one segment of the market right now that actually is doing the best, even more so than the luxury home market in the Phoenix area. The reason why they're doing so good is because, number one, people love something new. Number two, people will pay a premium for it, is what obviously we've come to find out. And number three, probably the most important thing, is that they are able to help people buy down their interest rate. So, for example, we talked about this before, but right now rates are at 7.5 that we just saw on the show. If someone buys down their rate on a 2-1 buy down, then their first year it goes to 5.5. Makes it much more affordable for that year one. Then it goes to 6.5, then back up to 7.5. You could do a 3-2-1 buy down as well, going to 4.5 in year one. It costs a bunch of money, but what these builders are doing is they are actually throwing in that as part of the deal. if you have the right agent to negotiate that and make sure they do that, because sometimes they're not always just willing to just offer that up. So we'd love to help you out on this. DM me, give me a call. I'd love to help you out and get you guys a really good deal on a new build. There's also the things that they do as well off the contract that potentially can be negotiated to get you a better deal, like credits or design center credits or credits towards certain things like HOA dues or whatever it may be. But we have a lot of good relationships when it comes to that. Now, how do new home builders get that done? They get it done in terms of the rate buy down. They get it done because typically before they buy or go into the plotting up all the lots of the parcel of land they're buying, they pre-buy a bundle of money with the big lenders, Fannie, Freddie, etc., so that they are basically buying down the rate in advance for their clients. Now that works great. So let's say they get a pool of money and buy $500 million, let's say some big amount of money up front because they have it. They're a national home builder, let's say, right? Public traded company, and they buy all that money at, I don't know, 6%. Now, if rates stay at 7.5 to 8, they can afford to easily give that out to all their home buyers because they already pre-bought the rate at the cost they paid. Which is great if the rates stay high. Now, if the rates come down and they eventually drop to say 5%, that's a bad deal because they wasted all that money for rates that someone could go get at par, way below 6% with any other lender out there. So hopefully that makes sense. It gets kind of complicated, but that's how these builders, are able to do this if you're using their mortgage company. So that's why the new home builders have been doing well in this whole aspect of the housing market right now because of the demand is there, and they're giving some incentives to make sure people continue to buy their houses as they build them. So hopefully that was a long-winded answer to answer that question specifically for you. Give me a call, 480-660-5974. Love to help you walk through that. Guys, thank you very much for all the questions. Thank you very much for sticking with us here on our Everything Phoenix YouTube channel. We always like to keep it at half an hour or less, and we're at that time. So I really appreciate all you guys. And then Anchor Point Media makes sense. Toll Brothers was offering that buy down to 5.55. Yep. And if it hovers around 7.5, that's a 2-1 buy down right there. And they already pre-bought that rate with money they spent up front, so they can do it because they have the money to do so. So that's interesting, right? It's interesting. Now, if rates come down pretty quickly in the next 6 to 12 months, could happen. And they haven't used all that money they pre-bought, they could be in a position where they're kind of hurting, right, to an extent, or they wasted the money, if you will. So we'll see what happens. It's a game of gambling, if you will, to an extent. But right now, it's working out well for them. Okay. So thank you guys very much as always, and join me next Thursday. We'll be back with more information on the housing market, development, and what rates are doing, and what the economy overall is looking like heading towards the end of 2023. Until next Thursday, stay classy, Phoenix.